The IPO on the street. I think Suraj Estates did get listed today. Of course, there was a bit of a decline and a tepid opening at that. But we have Rahul Thomas joining us, the director at Suraj Estate Developers, to talk to us about that. Congratulations first up on the listing, but talk to us about the demand scenario. Post-COVID, the real estate space has seen robust growth. How's the demand panning out for you, and what does the project pipeline look like?
Yeah, obviously in a upcycle, we are seeing the first time in real estate, we are seeing commercial and residential both doing well, and we have a footing in both the segments. So in the residential segment, we are doing two categories: value luxury, which is 1 and 2 BHK homes, and obviously luxury. So both of these are doing very well. In terms of our project pipeline, we are doing ongoing 13 sites, and which is approximately 0.6 million square feet of space. In terms of our upcoming portfolio, we have 16 projects with approximately 0.75 million of carpet area. So we have a good pipeline for next 4 to 5 years. And of course, as I told you, we're doing a good commercial project on Tulsi Pipe Road. So we're making sure that we have a pipeline for the next 4 to 5 years already created for lands acquired by us at historical cost.
Okay, Rahul, point taken. But the company majorly focuses on redevelopment projects, right? As compared to maybe, taking a fresh land parcel and building it from there. Would you continue to be biased towards this asset-light model? And what does it mean for the profitability going forward then?
So we're doing both these forms of redevelopment. In terms of our margins, I can give you an approximation in terms of margins. In 33.7, we make 40 to 45% is what we target as our margins in 33.7, while in 33.7B is 30 to 35%. So going forward, just to answer your question, our model would be the asset-light model going forward. So we have huge amount of societies coming up for redevelopment, and they want a preferred developer to develop them. And I think that's where we see a big opportunity going forward, where land costs are negligible and we can just, enter into a DA with the society. So going forward, that would be our strategy. And of course, right now we already have a pipeline created, as I told you, and one is to execute that and also create further pipeline.
Right, and can you also give us a sense as to what the pre-sales targets are for the rest of FY24 and beyond? Any near-term targets in terms of your sales, in terms of your profitability?
So I can give you an idea of what we did last year. We did 635 crores of pre-sales last year. So I can only assure everyone that we are on our growth journey, and we make sure we are on the right path to achieve our targets for this year. I won't be able to give you specifics on the numbers, but definitely I can tell you we are working very hard towards achieving this goal, and we are very confident in achieving our numbers this year.
And are there any new markets that the company is planning to explore? Because I know that Mumbai is clearly the core focus area. Are you looking at any others?
As of now, Mumbai would be a core focus. Of course, different areas in the MMR. So as I told you, Bandra would be the next market we'll be targeting. So I think we'll be quite bullish on Bandra. Apart from that, as I told you, once we know that this pipeline of existing projects are already exhausted, we'll be looking at other MMR regions, but it'll be a Mumbai focus for now.
Okay, but Rahul, talk to us about the entire real estate space as such, because we have seen a massive rally since COVID times in the entire real estate pack. How long do you think this momentum can continue, and any other trigger that you're watching out for?
See, I think even with interest rates going up, we're seeing a huge demand, whether it's luxury or it is the value luxury which we are doing. So I think, and as I told you, commercial is also doing well together. So I mean, this is the first time we're seeing all these segments doing well together. So going forward, we expect an interest rate cut through the RBI, which everyone is saying the inflation is almost in check. So I think with that, it'll even further bolster the real estate demand, and I think this rally will continue.
The market, of course, is pricing in some rate cuts to happen next year. Do you think this could perhaps provide a further leg up? And would you look at monetizing and capitalizing that leg up?
So, I mean, we have about 65% of our customers taking home loans. And I think definitely rate cut will definitely, provide that impetus in demand. So I think definitely we are looking forward to something like that from the RBI overall. And I am sure, even without the rate cut, we see a great demand. And I think only things can get better with the interest rates coming down.
All right, then just wanted to finally get in a take from you, just to understand what about the outlook is. And good to have you on board, actually. Thanks so much then for joining in and giving us a perspective as to how business is shaping up.